Welcome to another Wall Street Informer production on WSI TV.
Welcome on into another episode of WSI TV. I'm Sean Bauer, Chief Editor of Wall Street Informer on wallstreetinformer.com. Now today we're going to talk about something a little bit different than usual. Normally we're talking about Janet Yellen and the Fed and when they're going to raise interest rates, or what's new with the stock market in general. Today we're going to dig into the bag of tricks for the experts here at Wall Street Informer and talk about how we like to turn our 10% gainers into double your money trades instead. Now what it really comes down to is correctly utilizing one of the biggest wealth weapons there is on Wall Street. And it's something that not a lot of people know about, and even fewer still are willing to use because they don't know the correct techniques and they don't know the secrets to correctly utilizing this secret. But we're going to go ahead and dig right into it, and I can tell you straight away that this secret is all about options trading. Now, some of you may have already heard about options. You may have tried options out without knowing how to correctly use them, and you may have your preconceived ideas about what they are. I need you to do me a favor and keep an open mind. Think of options as something brand new if you've already heard of it. And if not, we're going to dig right into Wall Street's biggest money game, options trading. So let's start with the basics. And what is an option? An option is simply a contract giving the buyer of the option contract the right to buy or sell the underlying asset at a particular price by a certain date. Now, don't let any of the fancy language in this definition fool you. Options can get complicated if you let it, but if you look at it in the right terms and the right structure that we're going to provide, it's really something simple, and you're going to see how powerful it can be for you as an investor and trader. Now, when we talk about an underlying asset here in this definition, we're really just talking about the stock. So you're still going to be looking at stocks like you already know how to do. This is just putting it in a new context and providing a way to add leverage, as you're going to see here in a minute. Now, for the purposes of this episode of WSI TV, we're just going to focus on buying options contracts, and we're going to focus now on what the two different types of options are. Now, the first type of option, and the one that's going to be more popular for anybody who's new to options trading, is a call option. Now, this is simply whenever the buyer of the call option wants the price of the underlying stock to go up. Now, a put option is just the opposite. It's basically betting against a stock. So whenever you buy a put option, you're expecting and wanting the underlying stock to go down. So in the hope of keeping everything as simple as possible, just think of call and put options as two different things. Call, you want it to go up. Put, you want it to go down. Now, if you have those firmly in mind, we're going to go ahead on to everything you really need to know about options, and then we're going to move on to how it's going to turn those small gainers into those double your money type trades. Now, here's everything you need to know about options. First things first is every options contract, which is the thing you buy. If you buy one call option contract, it accounts for 100 shares of the underlying stock. What this means is it's really going to put you in control of 100 shares, and you're going to see how that works as part of the trade. The second thing is that each option trade includes an expiration date. Now, you get to pick the expiration date, and as we go along, we're going to show you how to determine the one that's right for you for any trade you're picking out. But the expiration date can be a month away, it can be a year away, 2 years away. We normally go for something in the middle there where it's 3 months or 6 months. But again, we're going to walk you through this as we go on. And the final thing you really need to know about options is that the value of the option is determined by both price and timing. So the price of the underlying stock and the movement of that stock certainly matters, but what you really need to keep in mind is that timing matters even more for options. Now, the mixture of one option contract controlling 100 shares and the fact that the timing, the expiration of an option contract really matters relative to what the stock is doing. That's what's going to give you the real power and how you're going to be able to turn something that just moves 5% in a week into something that can be a 50% gain in the same time frame just by using an option contract rather than trading the stock as you would normally. But let's quickly look at where the power comes from, why you're using options. Now, we've talked about different ways of gaining leverage in previous episodes of WSI TV. For example, we talked about buying leveraged ETFs whenever we're going to trade gold instead of trading the regular stock. Well, this is actually going to give you more leverage. We're talking about massive amounts of leverage, and leverage means more upside. But probably the even better reason for using options when you're taking on Wall Street is the fact that in addition to that massive leverage, you also get a known, completely known and limited downside risk every time you do an options trade. And that's basically just the price of the option. Now, this is all going to become a little bit more clear in your head when we go through an example here in a moment. But this type of risk-reward is really incredible when it comes to Wall Street and your type of trading. Now, let's say that to buy a call option, it's $500. And again, we're going to walk you through the pricing and different things like that. But if you say that's $500, that's the total risk that you're ever going to get with that option trade. Now, on the flip side, the leverage gives you a massive upside, unlimited upside, really, and where a 5% gain on a stock could turn into getting 250 back on top of your 500. A 10% move could turn into a double your money play. You'll always know that the only risk you have on this trade is that $500 that you put in at the very beginning. You're not going to lose any more than that. But let's go ahead and show you, make everything a little bit more clear by taking an example really quickly and get you acclimated to options and how you can use these to make powerful trades in the stock market. So for this example, we're going to say that the underlying stock here for this option trade is stock XYZ, and it's at $97 per share right now. You want to buy a call option, which remember is whenever you expect and want the stock price to go up. You buy a call option on stock XYZ with a strike price of $100 and an expiration 3 months out. Now again, you could have selected any expiration you want. It could have been a month out, it could have been 6 months or a year out. And we're going to show you later on how that affects the price of the option. But let's talk about the strike price real quick. The strike price is what the price of the stock has to increase to for the option to be worth anything. Now, since you have the strike price at $100, the stock is now going to have to climb $3 per share in order to make the option worth anything here. Now, the cost to purchase that option is $2.15. Now, since each option contract includes 100 shares, that $2.15 times the 100 shares is going to make the total to buy this call option $250. That's $215 out of pocket for you, and that's the total downside risk you have for this entire trade. If it expires worthless, you just lose the $215, no more. And just as a side note, that cost to purchase the option is what's known as a premium in the options trading world. Now, because the premium is $2.15, and because the strike price is $100, that makes the break-even stock price for your option trade $102.15. So if it expires at that level, that's going to be break-even. But again, you can close your call option trade by selling it before it expires, if you're in the money, if you want to close out that trade and take profits. So let's say a few weeks from now, stock XYZ has climbed to $106.70 per share. Now that's just a 10% climb, and if you traded the regular stock just by buying stock, that'd be a 10% gain on your money. So a nice small gain, nothing to scoff at, but it's also not going to be really life-changing money. Now with this $106.70 stock, after being $97, that could make the option now worth over $5. So here it could be worth $5.25. And if you make that times 100 shares, it's over $500. So as you can tell, $525 here. So if you take the current value of what the option is just a few weeks in, that $525, and subtract the premium you paid to buy the call option, which was $215, that leaves you with a profit right now at $310. Just a few weeks after the trade. And as you can tell, that's over 100% gains, solidly over 100% gains, solidly better than a double your money trade just a few weeks into the trade. And that's really where the power of options comes in. With that leverage, you're able to more than double your money in a matter of weeks. And if you're happy with those profits, you go ahead and close out the trade by selling the call option now, and you just pocket those $310 profits in your pocket minus whatever commission would be. Now, let's say the worst case scenario is you let the option ride. It falls back down below $100, below that strike price that we talked about, and whenever it expires, it's now worthless. The best news of all is that your maximum loss is just the premium you paid. Like we talked about, that $215 that you paid in the very beginning is the most you can lose. Now, I want to make a couple of things clear before we go on to anything else. The first thing is that I know there's a lot of information there very quickly that we're throwing at you. If it's too much, don't worry. First of all, you can go back and watch this again. You can look at some of the other options materials we provide. But I want you to know that this is just the very beginning of what we want to be a series in options trading for you, the Wall Street Informer viewer. Now, as we continue, as we go on through these options trading scenarios, we're going to continue to show you the specific ways to trade options to, like you just saw, turn what would be a small gainer into a double your money or more type of trade. Now, that's a very real scenario, and to be honest, that's one of the only ways that the experts here at Wall Street Informer trade anymore. We're just dissatisfied with those 5 and 10% gains these days because we know we can utilize the incredible leverage of options trading to get us more returns. Now, we're going to run out of time right now for this episode of WSI TV, but here's some of the things that we're going to get to later on and show you exactly what we're going to be doing with options. The first thing is going to talk about how options are priced, how to read an options table so you know exactly what's going on. You're going to be able to identify a bad spread between those buying the option and those selling the option. And we're also going to talk about a trick of ours that we use to determine if an option is a good value or not. And then we're also going to talk about paper trading so that you don't have to risk anything. So with all that coming, if this is your introduction to options, as I said, don't let anything overwhelm you. We're going to keep it as simple as possible, and we're going to walk you back through different scenarios, even like the one we just went through, as part of our options trading series. And if you're experienced in the world of options, if you've had bad experiences before, think of this as a fresh start. We want this to be a brand new way of trading options for you. And as you can see, it's incredibly worth it whenever you see the leverage you get, when you see the types of profits you can make in relation to just traditional stock trading. But again, we'll get to that next time on another episode of WSI TV. For now, I want to thank you for joining me on this one. As always, you can subscribe. We're going to have a subscribe button that you can click up in the top corner of this video. And I'll speak to you next time.
Thanks for watching another Wall Street Informer production on WSI TV. Be sure to visit wallstreetinformer.com where you can become a member for free and gain instant access to the secrets of market millionaires via the Wall Street Informer Vault. So go ahead and claim this gift for free now at wallstreetinformer.com.